Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday the 11th of December here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, London's IPO fundraising falls behind Oman's as low valuations and weak liquidity push companies to list elsewhere.
Bloomberg learns that the Biden administration is weighing new, harsher sanctions against Russia's lucrative oil trade.
Plus, surprising resilience versus Trump surprises. We bring you Bloomberg Economics' outlook for the year ahead.
Let's start with a roundup of our top stories.
London's stock market now ranks worse than Oman for IPOs. Once a regular in the global top 5, the UK is now only pulling in £1 billion a year in fundraising. Bloomberg's James Woolcock has more.
Picture the heydays of 2006, when the UK IPO market was a £50 billion juggernaut, beating New York and the home for a sixth of all M&A money raised that year. Now it's raking in just 2% of that high. Far from topping the rankings, comes in 20th. Poor valuations and risk-averse local investors are seeing Britain fall far behind new financial hubs in Asia and the Middle East. The UK government is attempting to change that with a wave of reform, but companies are already moving where the money is. 45 firms have left London exchanges this year, the highest number since 2010. Still listed in London, James Woolcock, Bloomberg Radio.
Trade unions say the UK government's pay plans are deeply offensive. Unison and the Royal College of Nurses are among the groups proposing a 2.8% pay rise for NHS staff next year. Paul Johnson from the Institute for Fiscal Studies says much of the anger comes from salaries lagging behind during the COVID period.
Public sector workers did lose out. So what I think the unions will be upset about is that's not making up any of the gap that has opened up. But given the constraints facing the Chancellor, I think it's pretty hard to argue for more.
That was the IFS's Paul Johnson. The Chancellor, Rachel Reeves, has said above-inflation pay rises would only be offered in future if they could be funded by improvements in productivity. But the government now has to balance improving public infrastructure and growth while reckoning with a public sector unhappy with their pay at the risk of strike action.
Israel has increased its attacks on military sites in Syria, targeting hundreds of locations, including airfields, weapons production sites and warehouses. The Israeli military claims the strikes are to prevent strategic weapons from falling into the hands of terrorists. Here's Israeli Prime Minister Benjamin Netanyahu.
We want relations with the new regime in Syria, but if this regime allows Iran to re-establish itself in Syria, or allows the transfer of Iranian weapons or any other weapons to Hezbollah, or attacks us, we will respond forcefully.
Netanyahu's comments came as Israel was forced to deny reports its forces advanced on Syria's capital Damascus after its seizure of a buffer zone between the countries drew condemnation from Arab states. Meanwhile, the leader of the rebel group HTS, which toppled Assad's regime, says the world does not need to fear Syria. Abu Muhammad al-Jalani insists the country will be rebuilt and is seeking stability, not conflict.
The Biden administration is considering new sanctions on Russia's oil trade to tighten the squeeze on the Kremlin's war machine. Bloomberg understands that the potential measures could target foreign buyers of Moscow's crude and its shadow fleet of tankers, which are used to transport its oil. The US already bans imports of Russian oil, but new restrictions would upend more than 2 years of policy set after Russia's invasion of Ukraine in 2022. Now, it's hoped that the move would increase pressure on Putin before President-elect Trump takes office and gives Ukraine more leverage in any potential negotiations to end the war.
The suspect in the fatal shooting of UnitedHealth executive Brian Thompson is fighting interstate extradition to face a second-degree murder charge. During a hearing yesterday, Luigi Mangione's lawyer said that his client will contest any request to move him from Pennsylvania to New York. Before entering the courthouse, Mangione shouted to the press about an insult to the intelligence of the American people as he was physically dragged into the building.
Completely out of touch, and it's an insult to the intelligence of the American people. It's time to finish.
That was Luigi Mangione there expressing his frustration with the US healthcare system. The 26-year-old was arrested in Altoona, Pennsylvania after a 5-day manhunt following the December 4th attack on Thompson in Manhattan.
Emmanuel Macron is aiming to name a new prime minister by tomorrow as he seeks to build a coalition of moderates. Bloomberg understands that the French president is meeting with major parties to form a cabinet that won't immediately fall to a no-confidence vote. According to a close official, Macron will aim to avoid a new legislative election for more than 2 years when his term ends, despite expectations for a fresh vote as soon as next July. He's under pressure to move quickly as the government's collapse has left France without a 2025 budget, and emergency legislation will be needed to keep the state going by January. Those are our top stories.
On the markets, a quiet start this morning as markets await the US CPI report at 1:30 p.m. Chinese and Hong Kong stocks are modestly lower. We're looking at the Hang Seng down by 0.6%. Investors are waiting any signals of further stimulus to come from the 2-day Central Economic Work Conference, which starts today. The US dollar is trading flat. Oil prices are rising 0.7 on Brent crude to $72.70 as the US is mulling new sanctions on Russia.
Now, in a moment, we'll bring you more on another unhappy record for London's IPO market, plus what Bloomberg Economics is expecting for next year. Yes, we're coming to that time of the year where we're thinking about 2025.
But another story that caught our eye this morning, school trips could be a key part of the UK's reset of relations with the EU. We're not sending ministers with piles of school children across borders, although that's quite a fun reality TV idea that I've just come up with. But our colleagues Alex Wickham and Ella Milligan have been reporting that Keir Starmer is trying to negotiate deals with individual EU countries to allow school groups to travel here using their national identity cards rather than having to get passports for their journeys as they now have. They now currently have to. So France and the UK already have one of these arrangements. The government's now talking to Germany about a similar one. This is the idea is that, you know, because there's been this huge drop in the number of school children who've been able to travel to the UK.
It's gone down Europe by about a third, actually, from Europe. And it's very, very lucrative. It brings in lots of tourism pounds. But, you know, every increase in cost for schools is quite a big deal. I mean, the average cost in the UK for going abroad is sort of at least about £400, goes up sometimes as £2,000. So when there's added friction in terms of passports, that makes it more difficult. And yeah, the UK wants a bit of that tourism pie. Yeah, indeed. So that's one of the areas that we're watching this morning. Let's bring you more now, though, on our top story around the UK's place in global IPO rankings. Fundraising for public offerings dropped by some 9% this year, on top of what was already a pretty unhappy track record for the London market in recent years. We've got our deals reporter, Sweetha Gopinath, with us for more this morning. Good morning to you. So the UK now ranked below Oman, Luxembourg and Malaysia in terms of fundraising. Is the situation as bad as it sounds?
Unfortunately, yes. It's every bit as bad as it sounds. London used to be one of the premier listing destinations in the world, right? It used to be in sort of the top 5 venues globally. Now it's at about number 20. We haven't had any large listings this year here either. We haven't had a single deal raise more than, say, $200 million. Compare this to even markets in the Middle East where billion-dollar listings are quite common. London is beginning to look a bit dismal indeed.
Yeah, so what's gone wrong then for the UK's IPO market?
It's not just one factor. There are several factors at play here. Perhaps the biggest is the decline in valuations for stocks listed on the market. London trades at a deep discount to the US and even to much of Europe. And investors in the UK market tend to be more risk-averse. It's a market that has historically been known for healthy yields and dividend payments. This means portfolio managers in London are typically sort of reluctant to back the type of growth firms that tend to dominate the IPO market. And then perhaps more importantly, regional markets, especially in places like the Middle East and India, have become quite robust. London used to be a big destination for international firms, but now many of them are just listing in their home markets.
Is there one place in particular that's sort of strong competition for the type of IPOs that the UK used to attract? I mean, is this just really all about all the money going to the US?
it actually is. While there's a lot more competition now from regional markets globally, the biggest competitor is still New York. Global capital is pooling there, and investors worldwide can access the US market, which makes New York really attractive for firms seeking a wide and deep investor base. A number of UK listed firms, including the likes of CRH and most recently Ashtead this week, have said they're moving their primary listings to New York. And even more worryingly, perhaps, large homegrown UK firms continue to flock to the US. We had Arm most recently choose New York over London for its IPO. Now there's fear that fintech Revolut will follow suit.
Yes, so can anything be done to revive the market in London?
UK authorities are very much sort of cognizant of the problem, and they are taking active steps. We saw the biggest overhaul of listing rules this year. It was the biggest in, say, more than 3 decades or so. The new Labour government is also more broadly looking at scrapping regulation that hinders economic growth. But if you speak to executives in the city, if you speak to bankers and executives, they say other changes are needed. It's not just about listing rules. One sort of challenge that's often cited is around exec pay. Pay for top executives in the US is many times higher than in the UK, which means UK firms also find it difficult to compete for top talent. The second is to create sort of a more robust investing culture in the UK and help narrow the valuation discount that has plagued the market. The idea is could be done by sort of compelling pension funds and retail investors to put more money into the London market itself rather than internationally. But that's not an easy task, of course.
No, indeed, and a kind of a major one to be tackled down the line as well. For now, Sweeta, thanks so much for joining us. Sweeta Gopinath there, our deals reporter.
Now, the global economy is set for another year of steady but unspectacular growth. That is according to the latest outlook from Bloomberg Economics, which also points to risks of a slowing labour market in the US and political uncertainty in Europe. Joining us now is our chief Europe economist, Jamie Rush, for more on this. Jamie, good morning. Is this a relatively optimistic outlook given all the uncertainty when it comes to economic growth?
Morning. I guess you could say it's optimistic. There's certainly lots of uncertainty, but I think there are some reasons to imagine that when Trump gets into office in January, he may be a little bit more cautious than he sounded on the campaign trail. First, he's got moderate voices in his administration. So there are people who are going to be in positions of power who don't want the world economy to go to hell in a handcart. If you look at his record the first time around, and I'm not saying that's the perfect guide to what he'll do the second time around, but you can see that they were actually very careful in the way they designed their tariffs. So if you look at the list of goods and services or goods that were tariffed in the first round in the first trade war, you'll see that it was targeted really heavily on intermediate goods, on capital goods, things that when you import them, you can spread the cost of the tariff across the whole economy. What he didn't do was put massive tariffs on iPads and consumption goods more broadly. So this will limit the inflation impact. If he goes around that route again, which we think he will, then there'll be relatively modest consequences globally. And so I think these are all reasons to imagine that he might be careful. You've also got the discipline of the market, right? So if he puts massive tariffs on imports from China, that's going to destroy supply chains of some of America's biggest companies. And he doesn't like the stock market selling off. Equally, he's not going to go on a massive fiscal expansion, probably because he'll face the much higher yields in the bond market. So I think there are some things which will constrain him. And if that's the case, then the global economy may hold up just about okay.
Okay, so that's the US and the global picture. What about the UK? What's your outlook there?
Well, I think the UK, growth is going to be relatively slow, sort of like a 1.5%. We have the boost from fiscal. Everyone talks about the next stuff for the UK, which is the tax on jobs, which is going up. But there is a big fiscal loosening relative to what was planned. They are going to spend an extra £40 billion. So I think you have that sort of boost from higher spending in the economy, set against the broader uncertainties that the world economy faces, of course, of which Trump is the number one probably. So I think, the UK is looking like it's going to grow slightly faster than the Eurozone, not as fast as the US.
Yeah, what about Europe more broadly? There's lots of concern about the politics in France, the stalled German economy.
Yes, well, there's now a vacuum at the heart of Europe. So we don't have a stable French government. We don't have a German government, and we won't potentially until the middle of next year. It takes time for coalitions to be formed. So the EU is basically without much leadership, and certainly no coherent, cohesive leadership, which isn't where you want to be when you've got difficult decisions to make around trade and how to position yourself with China. And of course, we have serious problems. Germany, as we all know, faces a real challenge to its business model. And we've done a lot of work on that. We think that GDP is about 5% below where it would have been had it carried on pre-pandemic trends. And you can thank a slower China and the energy crisis and the long-term increase in energy costs for those shortfalls, by and large. So how do you tackle them? Well, they're not easy to fix. We can't suddenly. It's going to be very difficult to suddenly fix the energy problem in Germany, and there's nothing that they can do about China. So I think the question for the next administration in Germany is: are they going to finally reform their fiscal rules, their debt brake, which prevents them from borrowing anything, even to invest for their own futures?
Okay.
And if we see some reform there, that may be a change.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.